everyone that's joined us today, I just want to say hello and good morning. My name is Adam Briones. I'm CEO of California Community Builders, and I'm so excited for the webinar that we have for you here today. So the title of today's webinar is Innovations in Building Home Ownership for Working Families. And today with me, I have some really great folks to talk about the work they're doing in the community here in the Bay Area, specifically out in Richmond, California, in the East Bay. I have the pleasure of introducing two folks that I'm hoping, producer Savannah, that you can bring on camera and on stage for me. First is Jim Becker, who is the president and CEO of Richmond Community Foundation Connects, RCF Connects. And Jim has been the president and CEO since 2014. Jim co-chairs the Ensuring Opportunity Campaign to End Poverty in Contra Costa County and serves on the advisory council for John F. Kennedy University's Sanford Institute on Philanthropy. He was recognized in 2013 as a Contra Costa Man of Merit, and in 2015 received the United Way of the Bay Area's Dream Award for his work to end poverty. Mr. Becker began his career working for the Minneapolis YMCA and has worked to strengthen families and build communities for more than 30 years. At the request of Congresswoman Ellen Tauscher, he served on a children's services panel with First Lady Hillary Clinton. Some of us have heard of her. And also served on the State Advisory Board for Child Development and Home Instruction with California First Lady Sharon Davis. So Jim, thank you so much for joining us today. And next, I'm so happy to introduce my good friend, Nikki Beasley. Nikki Beasley is the Executive Director of Richmond Neighborhood Housing Services Incorporated, RNHS to our friends, a nonprofit organization founded in 1981 to provide housing services and address housing needs through the development and management of housing projects. Under Nikki's leadership in the fall of 2021, RNHS launched their first Emerging Developers Program, which is a 3-month educational and capacity building program that centers Black-led development and real estate firms. Nikki is passionate about serving as a resource for her community and is committed to business and finance models that close the wealth gaps. Nikki sits on the board of the California Reinvestment Coalition, is an appointee to the Federal Home Loan Bank's Affordable Housing Advisory Council, and was recently appointed by Governor Newsom to the board of the California Housing Partnership Corporation. So Nikki and Jim, could you give us a quick wave? Awesome. Let's see. So producer Savannah, would you mind go ahead and taking myself and Nikki off camera, and then bringing Jim on with his PowerPoint? Because the first thing we're going to do today is I've asked my good friend Jim to walk us through a really innovative model that they're using at the Richmond Community Foundation around building home ownership for working families in California. So Jim, we're going to bring your PowerPoint up in just a moment. And without further ado, I'm going to go ahead and hand it over to you. Thanks, Jim.
Thanks so much, Adam. Hope everyone can hear me okay. So our housing restoration program began back in 2014 because the city of Richmond had a challenge. It had a number of abandoned single family and duplex blighted properties and no way to finance the reclamation, restoration, and sale of those properties. Next slide, please. So when the project began, you know, the challenge, of course, for a lot of urban cities is that code enforcement has to actively monitor blighted or abandoned properties. And in the city of Richmond, when we began this project, that number was fluctuated depending on the month and the year between 200 and 250 properties. At the annual cost of $12,000 per year per house just to manage the development of those properties, it was a significant expense to cities. Those properties also depress property values, property taxes go unpaid, bonds go unpaid, and they cause health and safety violations in the community. And they're a danger to children, right? A lot of these are located in neighborhoods that have schools. Kids sort of tempt each other to go into these houses as haunted houses. So they're dangerous. So our goal was to reduce the incidence of these blighted family homes, promote home ownership for local first-time homebuyers. And when we looked at the housing finance, we realized that housing finance is typically for large, multifamily, high-density developments. And there really was no financing mechanism to do single-family homes in particular. So we had to create our own model. So these properties remain, Yeah, no, you're good. Next slide, please. Sorry. So why do these properties remain abandoned? There's no profit in them. The private market doesn't really want them. Acquisition is a challenge. Sometimes who owns the property is in dispute. And there's a disconnect between the probate process and the tax sale process. So if the owners are deceased, the county tax collector or county treasurer has no one to serve notice to, and thus can't really sell the property. There's a gap there. Next slide, please. So our objectives were to basically identify, acquire, rehabilitate, and sell these abandoned properties to make clean, safe, and decent housing, to provide opportunities for first-time homebuyers, particularly through our Spark Point initiative, and then stabilize neighborhoods. And to do that, we created a social impact bond financing model so that we could recycle funding house after house after house to maximize the number of housing units in the program. And then, as part of our partnership with Richmond Neighborhood Housing Services, RNHS, creating a pool of emerging BIPOC, Black, Indigenous, and people of color developers to quickly rehab the properties. Next slide, please. Given that there were 2 to 250 properties to choose from, we had to come up with some acquisition priorities. So we created this point scale, right? Proximity to schools was critical. Those had to be first. Proximity to parks had to be up there. Proximity to properties we were already working on, so we could create neighborhood-wide impact. Number of years vacant. The longer the vacancy, the less value to the private sector, so we wanted those properties. And then how many code violations was the city levying and the county levying against these properties? And 5 or more was a priority for us. And then the acquisition strategy, right? What's the ease of acquisition? And we used a number of different strategies, including probate, tax sales, clear acquisition from the owner. We explored Chapter 8 sales, which is a tax code that allows county governments to sell properties to nonprofits. We haven't been able to acquire any through Chapter 8 yet in Contra Costa, but these were the priorities. Next slide. So we financed the program using social impact bonds as the funding source. And what's been great about this structure is that other cities now are interested in this process, right? The cities become the conduit issuer of the bond. So they're not responsible for paying the bond back. The investors hold that risk. The bonds are sold in the investor market. And for a period of term, usually 5 years is the term of the bond. And we use those funds again and again and again to do as many properties as we can. Next slide. So, as I mentioned, cities are the conduit issuer of the bond, but they can authorize a JPA like CSCDA to issue the bond on the city's behalf. RCF serves as the borrower, and RNHS serves as the program operator or the developer. The bond is secured by cash and properties held in the program at any given time. And we've been able to get an EPA Brownfields grant to evaluate and remediate properties so that all the illegal dumping and other stuff that's happened on that property has been addressed, so that when a family gets the property, they're getting a clean, safe home. The bond's repaid at the end of 5 years from sales to local first-time homebuyers. And we were lucky in the pilot program that we were so successful that Mechanics Bank, our investor, came back and said, we want to do another 5 years. Next slide, please. So the typical bond prospectus, it's typically a 5-year bond payable from program revenues. It has a 0% interest rate, but if any profit is generated, there's a 50-50 split between the program and the investors. Now, what's interesting about that is that most investors took the profit and they gave it back to us as a donation, right? So the banks. So why do banks do this? Mostly our investors are banks, because there's an act called the Community Reinvestment Act, and banks, if they do well in reaching out to communities of color and investing in low-income neighborhoods, they get more credit, right? So this program has taken our investor from sort of the satisfactory CRA credit rating to an exceptional rating. That gives them better borrowing terms from the Federal Reserve banks and everything else, allows them to grow their footprint. There's lots of benefits to the investors beyond just the cash. Next slide, please. So these houses that we've been creating are affordable to purchase, and we've been making them affordable to maintain. So why is that important? Well, these houses are very old. Most of them were built in the 1920s, 30s, and 40s. So they were not built at a time when energy conservation and water conservation and things like that were considered important. So we build to a zero net emission building design with low water usage, low embodied carbon construction, and we really focus on indoor environmental air quality, right? So the products we use, the paints we use, meet certain standards for that. And then we have a partnership with the Z&E Alliance. And so many of our houses now get solar panels, battery storage for the excess power. They get electric vehicle charging stations in the home, as well as smart appliances and other smart features, including smart plugs and other things. And what's cool is that we have a partnership with MCE. And so MCE, which is a local energy provider, is purchasing the excess power from the homeowner. So that's a great way for the homeowner to earn a little extra cash as well. Next slide, please. So what happened in the pilot? What happened in the first 5 years? So we restored 22 properties that were sold to local first-time homebuyers. We have used local hiring and contracting to really be the core of our model. We've increased additional neighborhood investments. So other property owners are now fixing up their properties because the property that was pulling them down is gone. And there's been a significant reduction in property crimes. We've tracked over the 5 years of the pilot, the property crimes in the neighborhoods, and they've gone down as much as 40 to 60%. Next slide, please. So there was a financial impact as well. In the pilot we had a $3 million bond. We did $6.5 million in local spending. So basically we flipped the bond twice and gave the investor their money back. We repaid to the city and the county over $700,000 in unpaid liens and property taxes, and we reduced the annual code enforcement costs to maintain properties by $350,000 a year. Next slide. There have been some additional impacts. So from the pilot, there's an additional, as I mentioned at the beginning, these properties don't pay property tax, right? They're blighted, they're abandoned. We've added almost $100,000 a year to the property tax revenue for the county. And that goes to support a lot of things in the local community. And according to the National Association of Home Builders, new homeowners on average bring $41,000 per household into their local economy. So that equates roughly to $697,000 per year to the city's economy. So total impact there was almost $800,000. Next slide, please. So steps for moving forward, how other cities and how other communities can engage in this work. So typically we approach a city and they assign either the mayor, the city manager, or a designee assigns code enforcement and finance staff and others to work with us to develop the project. We help them create a city ordinance describing the bond and allowing the city to issue the bonds for this and future projects. Then the city, RCF, and NHS, we identify additional key partners in the community, right? We need local champions to help us identify properties, to help us identify emerging developers. We develop an investment presentation, we sell the bonds, we secure the bonds, and we bring in the investors. Next slide. So that's it. that's the structure. I did want to add one other point around affordable home ownership. One of the things that our data showed as we got into this work, and we looked at the first 5 years and looked at who our homeowners were, is that despite our best efforts, we were still behind in home ownership rates for Black and African American first-time home buyers. So in partnership with a local donor group, we created a Black Wealth Builders Fund. So we can now provide up to $20,000 to Black first-time home buyers, whether they buy one of our properties or buy another property. We provide that cash, and really all they have to do is complete NHS's HUD certified first-time homebuyer program, and they have to be Black or African American, and they're eligible for up to $20,000. So we've made it very simple, and that's allowed us to really increase the home ownership rates in our program and in general for that work. So thank you.
Jim, that was amazing. Thank you so much, first for that really great presentation you gave us. And then second, for the great work you're doing in the community. Jim, I think having had the chance to work with you around some of our sponsored legislation in Sacramento, I just think the world of your organization and of you. And I think that frankly, really just leading the way in terms of the types of products and financial programs that do need to be out there in the market, covering not just the construction of homes, but also thinking about who gets to live in the homes. And for us, CCB is an organization dedicated to making sure that communities of color have the opportunity to buy homes. I just really think that you're leading the way in terms of the work that really needs to be done in the community. So thank you for that, Jim. We're gonna take you off camera, and then I'm gonna ask producer Savannah to bring Nikki Beasley and myself on camera. Awesome. So speaking of people leading the way, speaking of people doing amazing work in the community, speaking of people who I admire more than most anybody in the world, I want to bring on my friend and colleague, Nikki Beasley. And Nikki, before we start, I do have to ask a question. Does it embarrass you how much I tell you I admire you every time we talk? Or is that just like, it's just kind of gone on mute at this point?
No, I think you pay me back because I say the same when I talk about you. So
well, I'm good at some things, technical Zoom difficulties every now and again. But Nikki, thank you so much for joining us today. I know I gave a really quick overview of your background and your bio, but would you mind giving us just the 30-second on Richmond neighborhood housing and the work that you all do?
Sure. So our organization really has been committed to addressing the affordable housing needs in the Bay Area, but primarily keeping the mission, vision, and purpose of local residents that founded the organization back in 1981. We do that in a number of different ways through our rental portfolio, looking to acquire and hold the rental assets, making them affordable to low to moderate income families. We also, through our initiative of the Emerging Developers Program, looking at ways to support affordable housing for home ownership. Because when we started, or when I came on board in 2016, I saw that we were doing a great job through our HUD counseling, getting people qualified, but they couldn't afford to buy in high cost areas. So any way that we can address affordable housing that stays in our wheelhouse is what we look to do, as well as continue to be advocates of bringing different voices to the table as it relates to housing for all.
Absolutely. Thank you for that, Nikki. And then maybe just as a kickoff question, can you maybe give us a little bit more history? I think that Jim did a fantastic job talking us through the social impact bond program. Can you talk us through from the RNHS side, the history, how you all got involved, your experience, and a little bit more background from the RNHS side on that project?
Sure. So as I mentioned, I came on board to the organization in 2016, and I would say around 2016, 2017, the Blighted program was kind of at its height, where we were considered partners of the foundation, identifying our clients who could be qualified for these properties. And I would say that the majority or most of our families that were first-time home buyers were able to acquire, and became very interested in the concept and model because there was no one in the space talking about infill small site and, more importantly, ownership. So we wanted to figure out how we could scale it and bring it to different communities. And with Jim's help and partnership, we've been able to do that, taking that work and moving it through different counties.
Absolutely, absolutely. And before I get into a couple technical questions, from your perspective, I do know that you are one of the few, small site infill developer, sort of CDC focused on that particular type of housing. Like, curious from your perspective, why is this an important type of project to be taking on? And considering that there's much less, there are fewer programs to support it. What drives you to kind of put the time and effort on your and your staff into these types of projects?
So I guess because I'm somewhat naive in the work of we're looking to solve problems for community. And again, we have a healthy pipeline that says that if we could afford a home, we would buy. So we're trying to solve that need. But then on top of that, it speaks to the investment that has been stripped away from communities through redlining. And these, when we say infilled small sites, we're speaking of smaller lots, dilapidated buildings, things that tend to be ignored by the traditional developer because it doesn't scale, it is not profitable, and all the things that we hear. And these communities become ignored. So it's kind of a double interest of ours of one, solving the problem, but also at the same time looking to revitalize communities with the intent of not displacing individuals who want to stay in their community.
Absolutely. Absolutely. That's amazing. And, before I ask you the next question, for all those folks in the audience, as questions pop up on your end, either from Jim's presentation or for Nikki, we are going to go open it up to audience Q&A with Jim rejoining us in a moment. So do just want to mention that please feel free to use the audience Q&A button for any questions you might have. But so Nikki, my next question for you is, I know that you also, RNHS has a few other assets and housing units that you own. In terms of your work with Jim and the social impact bond structure versus other housing programs you've worked with, what's been the main difference in terms of ease of execution or flexibility or anything like that you think really sets that type of program apart?
Well, I was asked for a quote, so I'll share it now. If it's easy, everyone would do it. Just because it's not easy doesn't mean we don't do it. So there has not been ease. I would probably say in the last couple of years, are we hearing or bubbling up homeownership as being even a conversation or consideration? Prior to that, I was really the only one in the space saying, hey, we have to find a way to address other housing needs, not to say that, the focus of the unhoused homeless is not critical, but all people have needs of housing, and we really have to take, and I think it's an overused word, but a holistic approach to addressing the needs of all. So I think it's really been the need of the people really has been our mission and vision, because if it was because of ease, probably would not be something we're doing, because even though Jim and I are working together to make the social impact bond scalable, there still are fewer dollars to address the homeownership needs, especially if you're looking at area median incomes of 80% up to 120, which we bring into advocacy to say not all people of color are poor, but there's been this kind of trigger of need based on area median income, and knowing that people of color come into this economy through different lenses. We have been hoping to expand the conversation that even though people may look quote unquote good on paper, does not mean that they don't need additional assistance.
Absolutely. Absolutely. And you've kind of touched on it. When you think about kind of growing the model that you and Jim, have worked on in Richmond, what would you like to see this? Do you see this as a good fit for the Bay Area, for the state? What are you hoping for in terms of scale?
Well, the goal is to make it a regional effort. You were instrumentally a part of our AB 2560 initiative, really providing guidance. I don't think it's a one size fit all. I don't think it's going to be the only and all solution, but where there is blight, where there's dormancy, where there is vacancy, where there are opportunities that don't fit in the traditional model of housing, there needs to be a conversation about how to, again, revitalize these spaces so that all communities can thrive. So I do think that significant parts of the Bay Area as well as the state could leverage this, especially when we're talking about high cost areas. There has to be a way to bring affordability for home ownership, especially if everyone is, having this conversation about wealth gap, creating, legacy. And I think we all can agree home ownership is one of those tools, if not the only tool, that can help an individual create wealth and, do all the things that we hope and desire for our families.
Yeah, absolutely. Thank you for that, Nikki. And then I know you and I originally crossed paths around some mutual banking work and banking advocacy that we did and still do. And then I know you're active in a lot of different spaces. So, we've talked a lot about sort of what exists around construction financing, how we get, home ownership built for working families. Anything else out there in the housing or development world that you see needing to change or needing to be addressed so that we kind of extend these wealth building opportunities that you've been talking about?
Yes, I think with my first experience going down a legislation trail, as we advocate, as we explore, as we look to be innovative, really looking at how bills will be executed and what will they meet the expectation. Because I don't think we meaning the housing community, the housers, those promoting and advocating for affordable housing, we don't do a good job of looking at the execution and making sure there's not unintended consequences. And I think there are, people are thinking through how to possibly solve this problem. But the things I would bring to the table is, making sure that the bill's executionable and doesn't just sound good on paper, and really what are the outcomes and making sure there's not unintended outcomes. Two, figuring out how we can get around the area median income conversation, and not labeling people based on their income of who needs and don't need help, because I think we all living in the Bay Area can agree, regardless of your income level, it's hard, to live here in the Bay Area. Three, I think from a housing community, we have to be open to the conversation of and in both, not either or, and not one housing need is more important than the other, and trying to solve across all the different needs of community. And then I think of four, we need to continue to talk to the people, because I think a lot of times we're solving, but no one's talked to the people to understand if what we're solving for is actually addressing their needs.
What a revolutionary concept, right, Nikki? Like, we actually talk to the people that we say that we're serving. And so first off, thank you for that. And then I think second, really empathize with everything you brought up, but especially this issue of things sounding great on paper, but the implementation sometimes falling short. And I think, certainly as someone who works on legislation, who works in advocacy, that's a critique I need to point, at our work and at myself, just because it is quite easy to design something, or not, relatively speaking, design something that seems to work well on paper. But when we really think about the impact, I think that's what matters at the end of the day in the families that we're serving. So thank you so much for that, Nikki. So let's see, producer Savannah, if you could bring Jim back on camera. We'd like to open it up for Nikki, myself, and him to audience questions. And I think you just need to highlight the two of us. There we go. Great. So Jim, great to have you back. So I have a few questions that some of your admirers in advance of this webinar actually asked me to make sure that I asked you all. So let me start with one that's fairly high level, philosophical, and even maybe just a little not controversial, but mildly spicy. So one of the things that does come up is this question of, in a world of limited resources, are you ever concerned / how do we talk to our colleagues that are more focused on rental housing, especially for those at the lowest income? How do we talk to those folks and basically create a reassurance that, our work around expanding home ownership doesn't need to be a zero-sum game. Our work around home ownership doesn't mean less for those folks that are just struggling to have a roof over their head. And Jim, since you took a sec off, maybe I'll ask that one to you first.
Sure. So, there's a few things. One, we have to think about this in the broader context of equity, right? There is a lack of wealth building in communities of color that white communities have benefited from for generations. That generational transfer of wealth is lagging well behind in communities of color. And so part of it is, and at least in this country, and at least today, owning a home is one way of beginning to build wealth, and wealth that you can transfer across generations, right? And that's important. I think that's one answer, that's one response. The other is that you know, we will never be able to program our way out of this, right? There's got to be policies involved as well. There has to be other things that are connected to housing, such as wealth building. And really that's why I think, as Nikki said earlier, you know, it's not a zero-sum game. It's a balancing act, right? And the truth is, one of the great things about these properties is that they already exist, right? They're blighted and abandoned, but they exist. So the restoration of them into affordable home ownership is fairly quick compared to what it takes to build a large multi-scale, multi-unit, high-density project, right? That could take 3 to 5 years. We can do most properties in, 6 months to a year, from acquisition, identification to acquisition to completion. So we are putting housing back into the marketplace. And we are, because we're working with local home ownership programs and projects like our local Spark Point centers, right? Local residents are the ones who are purchasing these homes. So we're able to do this without displacement. And I think that's another key issue.
Absolutely. And I think you brought up some really great points there, Jim. And I think that, this is obviously, we live in a complicated world, and unfortunately simple solutions, don't serve us. So I think that thinking about it in a more nuanced way is absolutely the route to go. And Nikki, I'll ask you a similar question, but really kind of from the families that you serve through Richmond Neighborhood Housing Services, how do you see those intersections? Do you see those intersections that from the families that you serve of a moderate income household that also perhaps has low income family members that perhaps are indirectly served through this work? Or maybe if you could say a little bit about that.
Sure. I think it goes back to the premise of it's about the people. So wherever their housing needs are, that's where we meet them. We understand that ownership is not everyone's desire. So there are HUD counseling if it's just making sure that they have a solid financial foundation, good savings, and good credit, and they're not looking to pursue home ownership, that's fine. If someone comes and desires home ownership, we focus on the traditional model of getting a 30-year mortgage. But if that doesn't work, then we stay in tune with our partners, whether it's a land trust, co-op. So again, whatever home ownership looks like for the individual, that's where we're trying to meet the need, either meeting the need directly or working through our network to solve that issue. And then also with the need of supply, just to piggyback off of Jim's comment, this model is not jeopardizing any of the work that is already in queue to be done. Because again, these sites, these buildings were ones that have been ignored and unattractive to anyone. So for us to kind of take on that, it should hopefully eliminate the issue of competition or projects getting money taken away from because those monies were not allocated for this purpose to begin with.
Yeah, absolutely. And another question for you, Nikki. Why do you think that there is kind of a dearth or a lack of money for affordable home ownership?
So for anyone who knows me, maybe the reasons I'm invited to these spaces is because I'm transparent and honest. I believe just through the course of my work and the number of meetings and places I've sat in, I think that those that are addressing the home conversation sees home ownership as an elitist issue. That if you can afford a home, you don't have the same issues as these other folks out here. And although I appreciate, Jim's comment about leading with equity, that is not the primary concern or interest of those making the decisions on behalf of how funds are allocated in housing. And as long as people who are just living their daily lives and have melanin and are Black are being killed for no reason, we can't continue to assume that people are going to do the right thing just because it's the right thing to do. So it's an economic conversation. And up until this point, homeownership was not designed for people of color and Blacks. It was actually, if we look at redlining and all of the things, and anyone who, has read The Color of Law understands we were segregated from even having the opportunity to purchase. So this is really a new concept, I would say, to wrap our arms around needing to solve as a solution for, and our focus is people of color, Black, so that's who I'm talking on behalf of. But it's a new concept that those would be in position or have a desire to own, because housing typically has been, you have a fixed income, be happy that we can put you in this box and your housing is secure for X amount of years, and that should be it. And we're learning that people have desires and interests just like everybody else that we're trying to solve for.
Absolutely. Absolutely. And Jim, I hate to make you go after Nikki, but from your perspective, would also love your thoughts on on what I know are some nuanced issues. Why do you think that there is this real lack of financing to build affordable home ownership?
Well, I think Nikki's point is right on, right? From an economic perspective, if you can afford a home, you probably don't need affordable housing, right? And that's not technically true. And I like to use the example, if we are homeowners, we all live in subsidized housing. And why do I say that? Because the government allows us to deduct the interest off of our mortgages as a tax break, right? So we get a subsidy in order to live in a home. Who doesn't get that subsidy? Well, renters, people who cannot get into the home ownership market for a variety of reasons. Race, as Nikki boldly pointed out, is certainly one of them. And I think one of the challenges I'll mention too is that even though we're trying to provide this opportunity, we are pushing against systems that are designed to keep these buyers out. And I'll give you an example. There was a recent study released that real estate appraisers will, if it's a Black neighborhood, if it's a Black home buyer or whatever, they traditionally, consciously or not, I think it's conscious, but maybe not for everybody, but they will downgrade the value of the home, right? So the home is worth less if you are a person of color, right? And your ability to buy then gets impacted by that. I mentioned SparkPoint earlier, and I think one of the things is that we've seen there is that even though a person of color may have the same credit score as a white person, they still may face higher interest rates when they go to purchase a home. So those things exist, and calling them out and pushing back on them is important, because we can't expect, I think, and I'm going to parrot Nikki again here, or paraphrase her, we can't expect people to do the right thing because it's the right thing to do, right? We have to be continually pushing people and putting spotlights on these issues that continue to be obstacles for homeowners of color.
Yeah, absolutely. Thank you for that, Jim. And we're coming up on the 45-minute mark, and I know that we're aiming to make these really efficient, effective, and high quality webinars. And I know that you both have busy days ahead of you. So I think what we can go ahead and do is maybe ask for just a closing statement. And I hope you can also address, for folks that are interested in learning more about your work, about the social impact bond process, and perhaps how they can be supporting you in the great work that you do. So any closing statement, Nikki, and how should people reach you to learn more about your work?
Thank you, Adam. So I appreciate this time. Visit our website, richmondnhs.org, for more information about our programs. If you have a community when you drive up and down the street and you're like, why hasn't anybody did anything with this block? We would love to talk to you. Jim and I have been successful with helping the city of Hayward get their social impact bond approved so that we can help stimulate some of these activities there. So check out our website. I can put my email is nikki@eastbaynhs.org if you'd like to contact me directly.
So thank you, Nikki. And Jim, any closing thoughts?
Yeah, no, I just want to thank you, Adam, for putting this webinar together and allowing Nikki and I to come and talk about the work that we're doing and both the challenges and the successes. I want to thank the audience for coming as well. To learn more about us, our website is richmondcf.org, or you can reach me at jbecker@richmondcf.org. And I just want to offer up that the staff members who work with me on this project, Alvin Lewis, who I believe I saw on the webinar earlier, and Regina Keels from Spark Point, Madeline Ramirez from Spark Point, are people who are there to help people take this journey. Thanks.
Absolutely. Thank you, Jim. And I've actually had the chance to intersect with both of your great staffs. And I do want to shout out all the great team at RNHS as well as RCF Connects, just because a lot of great folks doing great work for the community. But part of that is they have great leaders in you, Jim, and great leader in you, Nikki. So thank you again for the awesome work that you do. And I know it's not exactly a huge secret, but hopefully within a few months, we can have you back on to talk about how this is really going to be scaled with hopefully some new and exciting resources. But we'll hold on to that for just a little while. So thank you again, Jim. Thank you again, Nikki. And I hope everybody has a great day. Thank you to the audience. Wonderful day, everybody. And we'll talk to you soon. Bye-bye.